Salam Sejahtera and good evening to everyone tuning in to this panel discussion on Sunday afternoon. Hope you are well and have been enjoying the InvestSmart Festival this past few days. My name is Kautsa Abdurrahman and I will be your moderator for this session. For this next session, we will have a fireside chat with three digital investment management operators or DIM. Briefly, DIM is fund management using innovative technologies to provide automated discretionary portfolio management services. From a user or investor perspective, investing in DIM or DIM means taking the service of a fund manager who will use digital or innovative technology to manage your money according to the portfolios that you have chosen, taking into account your risk appetite. This means what you are comfortable in taking risk when you do your investment, and also other suitability factors that we will find out more. We will find out what is DIM, who is it for, should you be considering using DIM service to complement your investment journey, and how can you learn more about investing through DIM from our panelists today. And we have with us Julian Ng, CEO of Akru, Muhammad Izzat Fadli, the Executive Director of Wahid Invest Malaysia, and of course, Ronnie Tan, CEO and Managing Director of MyTO. Before we start, I would just like to inform everyone to stay tuned till the end of the session, as there will be a pop quiz where you can stand a chance to win e-wallet reload pin. Also, please feel free to ask your questions throughout the session for our panelists to answer, and I will share with them throughout this session. All right, so let us now find out what is digital investment management, DIM, and what does it do for you? Julian, would you like to take this question, please? Julian, you're on mute. Perhaps you want to unmute yourself? All right.
So sorry about that.
No worries.
Yeah, I think that most of you, or maybe not a lot of you, might have heard about this thing that's this debate that's going on called the passive versus active debate. And we all know that in the last 20, 30 years in Malaysia, the active management, active investment management has been dominating the scene. But lately, in the last 10 years, the pioneer of passive management or robo-advisory started in the United States, and SC has been very up-to-date with these developments, combined with the other digital guidelines that SC have come up with, for example, P2P and equity crowdfunding, digital exchanges, and so on. Digital investment management is something that SC has come up with to allow us as licensees to manage people's money in a passive way, which brings about a few benefits. One is that it's a global diversification, it's instantaneous investment, it's very low cost, it's automated investment. So that is what the DIM is supposed to do.
All right, okay, great. I'm loving some of like the keywords you're saying, that low cost, automated. Like, does it mean like I don't have to think about it? It's automated, it's doing things for me, and it's also low cost. So I want to find out like who is DIM for? So Izzat, I think let's ask you this time. So is DIM for young working population that is coming in, or like they've got money that they spend every month, they also have money that they want to save for the future? Would this be for them, or would you say that DIM would also be for anyone who's also like working for a long time, young families, those who want to save for the future? It can be those who want to save for their children's university account as well. So yeah, who is DIM for?
Sure. The DIM is actually suitable for many types of investors, because they typically provide diversified portfolios, as Julian mentioned earlier. And these are created mainly not to cater for just the higher risk investors, but also the low risk investors. So through the very conservative portfolios that can cater people that are happy with a decent return with taking minor risks, and they can go up to the very aggressive ones. So let's say these are those that can take higher risks to get more returns. So when talking about like age groups as well, usually younger people can take higher risks. So that means they may be comfortable with the more aggressive, high in equity portfolios. But this does not deter like older age groups because they can still participate in investing in the more conservative ones to ensure that they can still grow their wealth without taking excessive risks. Their portfolios then may have a higher exposure in probably fixed income or other less risky assets. So diverse portfolios through the combinations of assets will allow different investors with different risk profiles to participate investing. And when we talk about people with regular or irregular income, right?
Mm.
DIM can be a sound investment for both groups because usually the minimum investment is low. So, for example, for Wahid, it's 100 ringgit. Some platforms may take fewer dollars to start to invest in their portfolios. So I think the key thing here is that not only you get to diversify your investments through the exposures that are given in the portfolios, but due to its low cost, it also is also open to basically those from D40 segments up to the T20 segments as well.
Okay, let's take that a little bit further. I want to understand, right? Like when you mentioned, like it's low cost and it's diversified. It can be for anyone. What if my income is not stable? I think you mentioned something along the line of, like this is also suitable if your income is not stable. So I want to ask you, like for example, my income is not stable and I do not have much time at hand because, for example, I am a home baker and and my income depends on sale I make each month, and I also do other part-time jobs besides taking care of my children. So would DIM be something that is suitable for me?
Yeah, surely, because at the end of the day, everything is digital. As long as you have a spare, 100 ringgit, for example, be it when you've made your sale, 1 month or 2 months down the road. The important thing is just to start investing, to start participating in the market, because at the end of the day, you want to grow your wealth. You don't want your wealth to sit basically in the savings account, not doing anything. And the good thing about DIM is that you can deposit anytime, you can withdraw anytime. Some of us use wrap fees, meaning that you don't actually have additional fees when you undertake these transactions. So as and when one have disposable income, they can easily participate in investing through the DIM platforms.
All right. Okay, great. I think just to kind of like go into like why we are using them, I want to ask this question to Ronnie. Ronnie, why should people consider using them on top of what Izar and Julian have said? Like, why should people consider DIM? And is it safe? Like, is my investment secure when I put my money in DIM?
Okay, good. Thank you. Yeah, I think first of all, I'll take the second part of the questions, whether it's safe, is it secure? It is part of a regulatory requirement that all the money and assets of the investor are kept under a trust custodian. Yeah, and the trust is also registered with a licensed custodian company, which must be authorized by Securities Commission. So in terms of the safety and whatnot is entirely under a trust. So it's that's point number one. The second point, like in terms of whether should the investing public start to use DIM. Well, thank you very much for Julian and Izzat who have clearly articulated the clear points of affordability, convenience, and so on and so forth. But before we do that, let's look at the underlying mechanism behind a DIM and try to understand what it takes, what are the important consideration when anyone does a investment. The key criteria, because of the various happening now, there are a lot of uncertainties, the pandemics, uncertainties, a lot of these are happening, very challenging issues, and the worldwide global talking about inflation, liquidity. There's so much of these activities all going on. And as a layman, how are you going to manage all these noises, the blips, and how many of us in general have the opportunity to be assisted by a financial advisor? That's where DIM comes in. DIM really trying to take care of all this stuff, the so-called to do all this heavy investing, yeah, the heavy stuff, and let you continue your day-to-day work. So certainly for everyone, as you mentioned, whether it's for a retiree, a millennials, or working mother, or the gig workers, it is something that Securities Commission, as our Julius mentioned, have put up this product where we want to make our service empower and enable everybody to have an investment in a very affordable way. So I think that yes, I think everybody should try to invest via DEEM. Yeah, and it's also very important to differentiate between a DEEM. Yeah, there are, I mean, to a lot of my clients will ask that it's deemed like, they could treat it as a trading commodity. It's like trading a stock, but it's not really a commodity or trader like a cryptocurrency or a stock. It is really an investment services where it's a digital wealth manager. So it's really a service to provide investment on the longer term.
Right. Thanks. Thanks for that, Ronnie and Julian and Izzat. I think like kind of like have like a background now of what DIM is, who is it for, and also what does it do. And I think like one of the thing like when SE introduced the DIM framework is also to build to have for DIM to have like a built-in investor awareness and also like product understanding, because people who come to DIM, as you have all like rightly mentioned, are those who are perhaps like first-time investors or those who do not have like much time at their hand, so they may have like limited like financial or investment knowledge. I would like to ask panelists, like, how can we learn more about investment through DIM? I've observed how, like, like as part of your DIM service, DIM license holders also use their platforms to do this, like to reach out to investors, to create more awareness. They put in like a lot of information on like their portfolios and the things that they invest in. So I find it very helpful. And also, like there's also like tools that can help me visualize projection of investment year by year, or by how many or how much money that I put in. So Julian, I would like to ask you, how do you think DIM built investors knowledge, like the investing knowledge for investors? Like for example, I have very little investment experience. Can I learn about investing through DIM?
Well, the good thing about technology is that a lot of this knowledge can be baked into the process and the product using algorithms and so on. Like if you wanted to, for example, create a portfolio for yourself, let's say a global portfolio, what you're going to be required to do is to stay awake, let's say at the US time zone, so that you can buy into these global stocks on your own and wake up at the right time, make sure that your money has been converted into the correct currency and put into your broker, and then buy your stocks in a way that is desired proportions according to your risk, right? This is very complicated. This is very complex. Not only is it complex, it's very painful. Yeah, for you to just DIY this yourself is very painful. So the investment technology providers like ourselves here on this panel, we just automate this entire process so that all you have to do is to get in there and then transfer your money, and then your investment is done. It's an example that I like to use is Grab, right? With Grab, you just state where you are, where you want to go, and then the app does the rest, right? The app will tell you how many minutes time your car will be arriving, what car is being used, and so on and so forth. All the required knowledge is actually baked into the app or the platform, right? And so that's us using technology to do away with the pain points. So those are the pain points. Then there is also the conceptual knowledge. There seems to be some disturbance. The conceptual knowledge that you talk about, like financial literacy,
yep.
how you can put years and years, if you like, of investment know-how, how you can learn that. Actually, with a technological product like a DIM licensee or a robo-advisor, they want to make that like automated as much as possible, right? So ideas like global diversification, like in any of a cruise portfolio, you're talking about thousands of equity and bond holdings, right? So this actually achieves very efficient risk return diversification. And then there is rebalancing. So all these concepts, we actually bake it into technology to make sure that you just need to do the minimum, right? To put in your money, to put your $10 or your $100 a month, put it in there, and then leave it until you retire or until you want to use that money, and then you withdraw that money, right? It's kind of like grab-like situation. Of course, you can do the work of learning more about investments on your by yourself, right? And all of our platforms actually give you that kind of knowledge for you to achieve higher financial literacy, how we do our work, how we invest, and how you can achieve your financial objectives and your financial goals.
Yeah, yeah, thank you very much for that, Julian. That's what I find as well. Like when I use my Deem app, like while I put in money, knowing that the app is taking care of everything, the Deem managers is doing what it's supposed to do with my money. I'm also learning from it, like because I'm looking at how the money grows and like how the chart is moving, and I'm learning more about like the exposures that my portfolio has, because I can see like like from my portfolio what I'm investing in. I also find that like having all this data, it empowers me in the sense that I feel like it motivates me to save more, to invest more in them. So you semangat to see your investment grow, like because you can see it in your hand, like you mentioned, like, you can see like when the grab arrives, and I'm looking at like how like my money is like growing like by the percentage as like time goes on. So with this, like Izzat, in your opinion, how can DIM or DIM help me build good investing behavior?
Sure, I'm going to touch on a few points. Firstly, investing in DIM is already a positive step in building a good investment behavior. And this is because participation in the capital markets generally is needed to grow your wealth. Compared to other developed markets like the US, for example, our retail market participation is still very low. So DIM is a digital channel that can enable further participation, whether it's in the local or foreign stock markets. And secondly, we talk about features of DIM. For example, we have recurring deposits, right? And automated deposits. So by using this feature, you can automate your investment to be it whether weekly or monthly. And this can actually benefit you in terms of dollar cost averaging your investment. So for examples, if you were to do like self-directed investment, investing in the stock market, for example, you will typically have to spend time looking at the market, knowing when to go in, when to go out, when to average your costs, and so on. So this feature that we have, you not only invest in diversified portfolio that tracks the general market performance, but it also enables you to basically invest, be it at a high price or a low price. At the end of the day, you still invest. That's the key point. And I think the third point that I would like to point out is the rebalancing part, or that's
Yeah.
usually done by any DIM platform, be it every quarter or possibly when triggered by certain market conditions. And what this allows is that your portfolio will then go back to your desired level of risk or asset allocation. And this helps basically safeguard your portfolio from being overly exposed to undesirable risks. So if you were to do your investments manually, these are the things that you have to always, keep in the back of the mind constantly. When to rebalance, when to bring back your risk level to a certain overweight or underweight levels. But for DIM, we do this automatically at least once every quarterly but usually whenever you do a transaction, be it deposit or withdrawals, your portfolio will usually be rebalanced anyway. So
Right.
the three key points that I mentioned: participation in the market, dollar cost averaging through recurring deposits, and rebalancing. These are some of the good investing behaviors that investors can build on, not only when using the IM, but also when doing any self-directed investments, or even when investing in other investment vehicles as well.
Right. Okay. Is that I think you mentioned just now, like, how you do everything, like, the rebalancing and so on. So when it goes up, down, that, like, you will make sure that it doesn't go beyond like the mandate of the portfolio and so on. But, like, as like a very basic question here, right? Should I be worried when the graph go down? Like, sometimes I put in my money, like say that I put in like 100 ringgit, then the next day suddenly it's like 99.80 cents. Like, oh, it's already like negative 20 cents. Like, should I be worried, or like, should I be concerned, like, when will it go up? Like, how does it really work, like, like in terms of like the timeline, when, how I should see it, short term, long term, and so on. Yeah. Or should I just like take out because, like, I'm worried, for example?
Yeah, sure. So I mean, this is obviously cliche, but market always have ups and downs, right? And another cliche
Yes.
statement that people always say is that time in market is always better than timing the market. So you will never know when the market go up, when the market go down. The important thing is to always make your fund work for you by putting it into the capital markets. Be patient and always remind yourself that investing is a long-term and sometimes a lifelong exercise. So that's where dollar cost averaging comes into the picture, because let's say you put in 100 today, it goes down to 99 ringgit, for example. Then you dollar cost averaging, you put in another 100, and then your cost will then go down. And when it goes up, when the asset values goes up, you can then capture a better performance. On the long run, again, generally stock markets tend to go up, and this is because the nature of the world, there is always inflation. General goods and services prices tend to go up, and this basically leads to increase in corporate revenues, and in turn the stock values as well. And we have other stuff as well: population growth adding to more corporate profits. New technologies coming into the picture makes industry leaner, efficient, and leading to new innovations. So all of this help the not just the equity side of the market, but also other asset classes as well on the long run. The important thing is to start investing, and start as early as possible. Whenever you have a disposable income that you can save instead of spending it, make the fund work for you. Invest. Don't be disheartened by 2-3% declines when you start investing. That's normal. Not all of us are able to know when the market is going down.
Yeah.
Some people may have a better experience because they may go into the market when it's down, and suddenly the price goes up, and they see, oh wow, this is good, and this is a good platform. But there's a sort of bias there, because your time is good, but it doesn't necessarily mean that it's going to be that way forever. So yeah, markets will always go up in the long run. There are stumbles along the way. Just have to weather it, dollar cost average, and hopefully let the diversified portfolio according to your risk profile works for you, and grow your wealth that way.
Yeah. I think
Actually,
that's. Mm,
if I can add to what
yeah,
Izzat,
definitely. Go on.
if you look at all the other crises, right, that we have gone through, that the market has gone through, like the most recent one is COVID. So the market has recovered from that. Right now, I think we're going through another crisis that's caused by debt concerns in the world. But you look at it from in the past, right? The European debt crisis, the global financial crisis, the Asian financial crisis, SARS, the dot-com bust of 2000, and so on and so forth, right back to the Great Depression in the 1930s. The market has always recovered, as Izzat said, right? So if you're looking at that market daily with a microscope, then and this is research, yeah. So research has shown that a lot of emotions come into your investments, right? The best thing to do while investing and while managing investing is to really take out emotions out of it. So whether the market is high or low, you just invest and you invest for your financial goals, right? Earlier on, I mentioned this active versus passive. Active is like you buy, sell, buy, sell, buy, sell with the hope of maximizing returns. But I believe in passive, all right? And a very good example of passive is, our parents or maybe some of us, we invested in property, right? And by and large, if you took out a bank mortgage on your property, you hold it for 30 years, day one of your mortgage, the last day of your mortgage, let's say 20, 30 years later, you suddenly got surprised because your property value has gone up so much, right? Now, you don't see people buying property one day and then they read the newspaper, then they sell. I mean, some people do this, but by and large, property owners don't do that, right? They just are very passive. They buy once, and at the end of 20 years, they see that property has gone up in value. So I think the DIM holders or us robo advisors, we are actually allowing people to do that, to invest in property, but like in a way in which they have invested in property, but not in property, in actually a global diversified portfolio in which you can capture the growth and innovation of the world. So that's what we want to allow people to do, but in a passive way, buy and hold until your financial goal is fulfilled.
Right. Thanks for that, Julian and Izzat. I think just to kind of like summarize it, I think it's very important. Like, for example, I think this is more prevalent in like when you compare your investment journey with your friend, for example. Like, hey, I put in my money in DIM and, it shoots up to like how many percent. And then my friend is like so, excited about it and put her money in. And then suddenly it's like, oh, hey, why am I getting like negative returns here? I think it's very important to then remember, like, like Julian, what you mentioned, it's not what you want to see the next day. It's the long term, it's the long game, it's the passive nature of DIM investment. Like, I think it's a very good analogy that you use. Like, when you invest in property, like you don't see like, the price dropping tomorrow and you're selling it out. So again, it's more of the goal of the investment, which is for the long term, maybe for your retirement, for your children's education, and so on. Thank you so much for that. I think we can let's go on to like the next question, which is it's open to anyone who want to take the question. It is like, can I use DIM as saving? Like, can I take out my money when I need to?
Yeah, I can take it. So the features of for example DIM platforms is that you can do your transaction anytime and anywhere, basically, and that's enabled by the digital nature of it, right? You can request to do deposits today, for example, and you can do it via FPX or via bank transactions, and you can also request for withdrawals as well. Of course, it takes time to then sell the securities and then pass over the funds to you, but because everything is digital, it's easier for you to just you can consider it as saving, but it's still an investment product at the end of the day. You put your money in, yes, you can take it anytime you want, but as long as your money is in the investment account, it's going to be invested, and that's the good thing of it. So if there are investors that would probably want it to would probably want to treat it as a saving, they can probably go to the more conservative portfolios that can have high exposures, and fixed income also that can give regular income. And when they want to use the funds, probably for business or for or whatnot, they can just request for withdrawals, and everything will be sold, and the funds will then pass back to you via the custodian.
Yeah, thanks for that, Izzat. I think there's a question that just came in, and I think it's a good time to ask this. So the question is, what is the difference between companies' DIM methodologies? And well, you can interpret it how you want, but I also want to take that chance to add on like my own question here. It's like, what are some of like the features you have that promote greater learning on investing? So this is open to any of the panelists. You may answer on your DIM methodologies, and you may also want to share like some of the features you have that promote greater learning of investment through your platform.
Okay, maybe I'll take this up. Yeah.
All right. Okay, running.
Yeah, I think that's very important that obviously, each DIM would have their own methodology. Okay, and certainly the things, the underlying considerations that both Julian and Isaac have talked about, okay, are all very valid. Yeah, I think the few key points that I want to elaborate that is in the investment journey. Yeah, it's important to talk about diversification. Yeah, but to the general people, what is diversification? Yeah, so they could be very engrossed into, well, diversification, what does it really mean? And how does a team decide what to diversify? What's my risk profile? What's my persona? So on and so forth. Yeah. So for example, a platform like MyTio, yeah, is highly customized. Because when you talk about diversification, okay, most of them will diversify both in Malaysia, some will be very global ETFs. Yeah, and there are pluses about ETFs, which I didn't talk about, passive management and whatnot. Yeah, so when you diversify, when you look at the individual, okay, and you look at the industry today, a lot of people will be probably pushing a certain product, assuming the product is suitable for everybody. Yeah, and that's a very generic product. I think what Dean takes the further step is, can we really customize a certain portfolio that suit a particular person, depending on his risk profile, his age, his investment horizon, okay, and his assets. Yeah, and this is really talking about diversification into two things. Yeah, first of all is, how much money should if I have a 500 ringgit, let's say, how much of my 500 ringgit should go into equities? What percentage should it go into income? What percentage should it go into inflation and growth? Yeah, should it be 50% into high risk growth, 30% into income, 20% into inflation hedge? Well, each individual would have a problem trying to understand that. Yeah, so where Dean comes in, like for our case, we ask certain questions. By having these 5 questions, we allocate a certain portfolio depending on your persona. For example, Kausa, you may have 50, 30, 20. Yeah, 50% growth, 30% income, and 20% inflation. Yeah, Julian could have 80% growth. Yeah, 10% income and 10% inflation, so on and so forth. So the 5 questions really, the question that I ask really is trying to construct an optimized portfolio. Yeah, and how they fit in is we're really looking at, because if you have a large asset base, for example, you have $1 million asset, for example, okay, the main intention of the algo is really to protect your 1 million against inflation. Yeah, because, and if you have a shorter time horizon, we wouldn't be putting so much into equity. So this whole investment phenomena is really trying to construct and customize. And obviously within each portfolio itself, for example, like, that with about 31 over ETFs, 31 ETFs really consists of close to 10,000 over companies, worldwide companies spread over 86 countries. And one point good about DIM is we support fractional shares, which means your 100 ringgit, for example, they're talking about, technically, you're able to invest in stocks like Tesla or ETFs, so that is making it very, very affordable, okay, and making it a very kind of customizable. And its investment is really a journey, okay? You do not put 100 ringgit today and leave it for the next 5 years. So the algo actually look at it, looking at your question, your persona change, it ultimately re-optimize, rebalance during the necessary buy and sell for you. And that's the beauty of DIM. And guess what? This is all highly digitized. Yeah.
Yeah. I really like your point about the fractionalized investing, which is like, like I put my 100 ringgit in DIM, but I'm actually like having some, investment in Tesla or, other US equities and so on through DIM. That's really great. Is that, or Julian, would you like to take the question, or we can move on?
Sure, sure. Let me just quickly add
All right.
to that question of how we inculcate good investing habits. Basically, what we have done, we have allowed for financial goal management. So the different types of short-term, long-term goals that people have, we think we can encourage a financial clarification by allowing people to set up goals which would have different requirements for risk and returns. Okay, so if you think about a long-term goal like retirement, then that goal can take actually quite a lot of risk to reap the most returns over the next 20, 30 years of your working life so that you can retire with comfort. Then you might have some other short-term goals like saving to travel or saving to get married or saving to buy a property, then that would not be able to be exposed to such a high risk. All right. So I think we like the fact that we allow people to do that. But as far as the portfolio is concerned, we sort of like structure it according to what is a global portfolio, right? So you just take this simple concept. Obviously, there's a lot of complexities underneath it, but just this idea, if you can invest in the whole world, what would you be investing in? And that's how we have structured our portfolios, because right now, if you look at all the companies that are dominating a global portfolio, like Apple, Facebook, Amazon, Samsung, Tencent, Alibaba, we don't want to redo their work, right? Apple is a global company, Samsung is a global company, Tencent, Alibaba, and all, Facebook, they're all global companies. So we are riding with them, and there are people who index providers whose full-time job is to see what companies actually represents the world. And then they put that into the index, and then an ETF would replicate that, right? So we like to do that. We just like to give you what the world is giving you, so that over the long term, you can mix and match that global equity portfolio with a global bond portfolio to make that risk-taking efficient as possible.
All right. Thanks for that, Julian. Izzat, would you like to take on the question and answer, like, like the methodologies for Wahid, if you'd like to share?
Sure. Yeah, like Ronnie mentioned earlier, at the very least, the DIM utilizes what we call, or what the industry calls, model portfolio theory to get, to achieve an efficient frontier for any risk profile of investors. What this means is, for any particular investors, there is a portfolio that can provide the best return, risk-adjusted return. And it will be different for each DIM, because the universe of ETFs or funds used are different. For example, because Wahid is a Sharia only platform, then our universe would then only consist of Sharia compliant ETFs or mutual funds. Therefore, the underlying will then the allocation will be different, the percentages will be different. But at the end of the day, as Ronnie mentioned, if you are younger, have more disposition for growth, you get a higher growth portfolio. If you are slightly older, going to your retirement age, you'll get a more allocation into sukuk and so on. So the investment methodology is roughly the same. The aim is always to get the best or the optimized portfolio to get the best return for your risk profile. And the other things that comes with it, the rebalancing during transactions or every quarterly and so on, that just helps you along the way to reach the financial goals.
All right, okay, thanks to all the panelists too for answering the questions on methodologies. I'm very interested to hear, a lot of you talk about like, the diversification of portfolio and how DIM can optimize this for you and so on. I want now to talk about like, like a person's investment journey. Excited to start a DIM investment, for example, but at the same time, I want to know where, like, or how I should see my DIM journey. I may already have savings made in tabung haji for to make my haji my to to fulfill my haji the things. I may have like ASB fixed income. I may be interested to invest in other things like, for example, like through in stocks, and also so to try for things like cryptocurrencies and so on. So in terms of like DIM, like where should it be in my investment journey amidst other things that I may invest in or spend or save in?
Okay, I can take that quickly. Okay, my answer to that, it might be controversial. I think your DIM journey starts outside of DIM. Okay, that I think this is very important to note, in my opinion. You really have to do well in your other investment, which is your investment into your life, into your career, into your family. Okay, and then, for example, that money that you make from your job, you save part of that. So that will give you a kind of two-stream investment, right? Because in your job, you're just using sweat capital, right? You don't come up with one single cent. Maybe you can argue that, oh, I spent some money on my studies and I spent some money on the course or something like that. But that is a very, very small cost compared to the potential earnings, the potential returns that you can get from your career, all right? Most people's wealth are generated primarily first from their career, and then reinvesting by not spending 100% of their income, right? And reinvesting some of that income in actual investments. And that's where the DIM comes in. So I would say the bulk of that journey starts with your financial life, which is outside of the portfolios themselves. I think that's very, very important. So all those skills that you learn about budgeting, about how to make your cost efficiency in your household effective, where you're going to live, the kinds of relationships that you would have, really would go to help in bringing up your career and ultimately making you happy. Your savings itself, put that in a DIM.
Interesting. All right. Izzat or Ronnie, you guys want to add on to that, or if you have a different take on the question? Ronnie, you're on mute.
Yeah, sorry. Yeah. Okay.
Okay.
I think that during this pandemic, okay, it really has shaken up a lot of people, and people are going to look at it in a very different perspective in terms of investment. Okay, so many of our clients will say that I'm even struggling to meet my ends meet. How am I going to save? These are very fundamental. And I have this thing that like during our days, during my time when I was a young millennial, yeah, uh, we do not have such an investment called DIM. It is all pure hard sweat. Okay, and our folks did not really teach us that much about investment. Okay, and there's no such internet that is so readily available for us to get information. So to me, there is a lost generation of investment. Okay, at least many generations have lost, and if all of us continue to procrastinate, that lost generation of so-called investment will continue on and on. And that's what we're during many of our webinars and interaction with a customer. This is a very fundamental education. does not really matter you save 100 ringgit or 200 ringgit into dollar cost averaging, as Isaac has mentioned. It is important. Okay, example today, okay, people are taking money out from EPF. Let's say you take 100,000 out from your EPF, just an example, or 50,000 out from your EPF. That 50,000 is meant for your future. You have diluted it. You have taken it out. How are you going to recover back the 50,000? Okay, and many of the unlucky one, unfortunate one could have pay cut. What are you going to do about it? Okay, what are you going to do about it? And I think that the important thing is start early, plan for uncertainty, have built up that safety nest, emergency funds, regardless of whatever. I mean, people are talking about instant gratification. You know, I spend first before I save. Yeah, and people are, I know the investor, the millennials will say that I also want instant gratification in terms of reward. I want to see 20% return immediate. But investment is not meant to be that way. So I think it's a job of us, you know, the panel, the DIN, together with the authorities, to articulate and push forward, saying that, hey, it is time to put your little money in there. DEEM is very, very affordable. It is very efficient. It's very effective. Okay, and it can give you a good return over the years. I think that's one point that, so the journey, in fact, should start yesterday. Yeah, it should start, you know, immediately. Do not procrastinate, you know, and the question is, have we reached the peak? Is the market going to go down? Yeah. So if you look at it for since 2009 until now, over a 13 years period, S&P, every year there's a positive return, except 1 year, which is 2018. Yeah? There will be intra-year drops. Yeah, like last year in March, a 30% drop. Yeah, but if you panic and have exited, okay, there goes your money. Yeah, so there's never really a good time. The good time is actually now. Yeah.
Yep. All right. Wow, very inspired from that from that speech, Ronnie. Thank you so much. And thanks to Julian too. Yeah, I think I agree with you. I think there's also that saying, like, you know, like the best time to plant a tree was 20 years ago, but the next best time is actually now. So I think that's a really key message, especially when it comes to, like, you know, growing your money in times where it's uncertain. And I think you know, I think you nailed it very well. Thank you so much. I think to just we kind of like at the end of the session now. We've got 8 minutes left. I want to ask like very practical question, or perhaps an opinion or tips. Like, how much of my money should I invest? Is there like a formula to, like, you know, like, for example, you know, to anyone with any sort of income, what, you know, like how many percent of it should I put in DIM, or, you know, like if you have like thoughts on this, or if you have like tips on, like, you know, how much I should put my money in for investment.
Okay, I can start. I think the general rule of thumb, and this is by no means scientific. Yeah, it's not really scientific. You actually should just save as much as you can. But the general rule of thumb in Malaysia is that you're already saving 25% thereabout because of EPF. All right. So employee plus employer EPF, around 20 something percent. So all you need to do is save, and if you saved another 10% of your salary monthly of your income, then it's very good. Your savings rate is at already around 1/3 of your income. And I think that as your salary rises throughout the years, that would put you in a very good position to spend your retirement, right? To be financially secure during your retirement. But, these days there are ideas like the FIRE movement, right? Financial independence, retire early, where people work as hard as possible in the short term, and then they sort of like have a minimalistic lifestyle so that they can retire early. today, because of technology, actually, if you want to go on that kind of philosophy, you can, right? Today, you don't really have to buy a car anymore because of all the options that are given to you out there. There are digital business models coming out for property. Actually, if you just want a roof over your head, you can work from home. You don't really have to live close to your office. So that's a lot of money left behind for you to invest, actually. So you can actually subscribe to the idea of actually saving as much as you can, have a minimalistic lifestyle, and then you achieve financial independence. Yeah, you'll be in a better position to achieve financial independence.
Julia, I want to pick out some things that you've mentioned there just now. Like you were saying that you know, invest like through consistently, and then like you'll grow it along with your career and also your life. It is the concept of like like sikit-sikit lama-lama jadi bukit. But at the same time, like there are like real things happening. Like I may start my journey as a single lady, and then I'm able to save, like for example, like as you mentioned, like 10% or 15% of my savings. But then after that, like I'll have families, and then like, and when you have families, you have kids, your needs just grow, and you're just spending money like water on, like on things that come with like family life. It's real. And how should I deal with that? Like, can Dean prepare me for that, to have like different portfolios, or like like how, or how can Dean be the vehicle for me to go through my life, and also my career, and also my investment, to reach like that retirement that you mentioned just now, which is like like a financially independent at the end of my career life.
Well, for Accrue, if you go into Accrue and you click on the retirement app, sorry, the retirement goal, we will be able to use past data to project for you how much you will be able to spend during your retirement years. And this is input from yourself. Okay, so for example, if you say that your current lifestyle is, let's say, 5,000 ringgit a month in today's money, then we will actually spit out savings for you based on the recommended portfolio, which is based on your risk profile and based on the returns of that risk profile, right? And then you will be able to have that magic number of how much you need to save in order to achieve lifestyle spending of 5,000 ringgit today's money. That's how we are helping you. But, by and large, actually, people have a sense. I mean, I think most people, if they really sit down to think about it, they really have a sense of whether they're overspending or not, what they can cut down on, and what are necessities that they have to spend on, like children and the children's education and health and so on, putting food on the table, that kind of thing. Yeah. People have a very good feel of that as to how you can manage your household expenses, coupled with a progressing career. I think people would be able, if they sit down and think about it, they would be able to have a sense of what's happening, and then go to the DIM, the robo-advisor, and get those projections.
Can I just add on to that, the 2 points? Yeah, sure. Just how you mentioned about how much you should save. In fact, you look at it is, if you have two cups of Starbucks a day, assuming, yeah, all you need is just save one Starbucks, which is $10, yeah. So 20 days is 200. So instead of drinking a coffee Starbucks, why not go to DIM and invest in a company called Starbucks? That's one scenario. Yeah. The second thing that I want to talk about is to further add on what Julius had mentioned. Okay. For example, in our app, there is a financial simulation app. Okay, in our app, I will ask you questions like, okay, there are many scenarios playing that if I want to get 5,000 within 10 years, what must I invest today? Okay, one scenario. Or if I have 100 ringgit to spend, to save every month, within 5 years, how much would I get? So there is a financial model in our app that shows you your destination. Okay, and it's important to have, you may have also multiple portfolios. For example, in our case, you can have multiple portfolio. One is very strictly customized for assuming it's 50, 30, 20. When I say 50% or 50 means it's 50% in growth, 30% in income, 20% inflation, for example. You could also have one, it's very short term, put 100% into growth, second portfolio. A third portfolio, you could have said that 60% in the income because I want to get dividends. I want to get a very continuous pay to meet my daily expenses, my necessity. So there are many ways of doing it in structuring it. And that is really the beauty of DIM because it's highly innovative, highly digitized, okay? And you can actually structure it along that way. And there are
All right.
choice, yeah?
All right. Thank you so much. Actually, we're actually at the end of the session. Izzat, I actually want you to say few words just to conclude. Could you just give like a very quick short one just to end this?
Sure. Yeah, I think it's important to for audience to know that DIM, is firstly and foremost it's a regulated activity by SC. So everyone can be rest assured that it follows the guidelines and so on. And it's a digital channel that allows you to grow your wealth. So, for example, if you already have other kinds of investments, you can incorporate them into your life. Because as a digital channel, you can use it anywhere. It's easy. Minimum is low, about 100 ringgit or lower. It's low cost, less than 1% fees. Yeah, so all these talking points about DIMS, right? At
Yes.
the end of the day, use it as a means to grow your wealth passively. Being in the market or investing is always more important, regardless of how much dollar you can save, because yeah, you want to let the money work for you, let it compound over time, and this is the things that's most important. Your investment will always compound over time, and that's where most of the returns come from. So yeah, there are many providers in Malaysia. You can choose whichever, or you can use all if you want. You can do your own research. You can use the journals or the learnings from the DIM providers themselves. At the end of the day, it's there. Please use it because
Okay.
it's for your benefit. Yeah.
All right, thank you so much, Izzat. That sums it up really well. And of course, thank you so much, Julian, Ronnie, and Izzat again for spending your Sunday with me at this fireside chat for InvestSmart Fest. I have learned so much from the panel, and I hope the audience have gained something too. Don't forget to answer the pop quiz to win your e-wallet reload pin. And thank you so much, everyone. Once again, hope we meet again soon. And jaga diri, jaga pelaburan, everyone. Take care. Assalamualaikum. And good evening, all. Thank you.